the basics of trading, very basics, in case you're forced to get into trading or you want to trade when you're in a deficit or something. You need to know how to trade, when to trade, and be careful because you have to be in an upward trending pattern. If you don't really recognize it, know what you're really doing, you can lose a lot. So be careful how you do this, and this is just information, not financial advice, so check it out. A little follow-up on my last video about when to buy in. If you're going to trade stocks after a dramatic pullback, and a certain time and when you want to do a trade would be safe to do. And like what just happened recently was this is actually a ascending wedge or a flag. A flag is going in a down direction, an ascending wedge is going up direction. At the top of the flag or the bottom of the ascending wedge, that is a sign for a bull market, and that's a stable run after a dramatic pullback, which it did do a pretty good one from that point on this morning. So that was a buy signal. That was like the textbook buy of when you want to buy in. That's actually a really great one. That is when you want to buy. Now you see that it's dropping. You want to sell at this point and then take your profit. I'll have like 20 grand in it. I just sold it. That would be a profit of like 1,100 bucks or something. I wouldn't put in normally if I'm doing stocks I'll do trading with like with margin of like 100,000 whatever, aside with my other accounts and other things that are long term that I don't do with, but these certain like Robinhood and these other accounts I have just screwing around for entertainment and make a little bit of money. You could do that. So now you're gonna look at when's the next time to buy in. Because I think cryptocurrencies are easier to trade on than stocks because the volatility's there, but the momentum is slower. So a stock seems to bounce up and down a lot faster in a higher ratio. So you have a higher probability of trading on a stock. Well, or maybe it's just Dogecoin, the volume could be down or something, but it's moving. The speed which stocks move so fast is a really hard determinant to trade on because it's easy to lose money. But like when you have a nice, slow, gradual build up, and you have a run that's a decent amount of size, you can make a little bit of money on it, decent amount of money. So the next time would be safe to buy into this thing. As everybody knows, once it pulls out over the top of the last height peak is, that's called the bull, and that is technically when you'd start your next trade. But the safest time to do the next trade would be look for the flag or the ascending wedge. So after dramatic pullback. I mean, if you were wanting to press it a little bit, maybe 2 times in a row, you would probably you'd maybe buy in it like once you know it's over this at 0.37 and a half cents or something. Except it could be a fake out, so you don't really know, so you probably would not want to do that because it's not stable. But after a dramatic pullback, you would after a drop of say like another nickel, you would go back into it and start trading again. Unless you've bought Dogecoin at a low price in the very beginning and just started and just stayed in it a long time. But even then, sometimes you'd want to take out the high point and cash out because it's always going to drop. I mean, like the high point, the other day is 42 cents, which is funny how Robinhood actually changed it. It was like 45 when they did it on the day, and then they changed it. They always go back and change their chart because they're doing something they're up to something. But you'll notice that if you watch it. But like the all-time high, I mean, a lot of people, you could cash out of it And a lot of times I'll trade all the way from the very beginning all the way up and then cash out. It's kind of your preference what you want to do and how much money you want to put in it. If you have enough money that you just want to put aside and let it sit in there, I mean, I just do this because it's kind of fun. It makes a decent amount of money. If you let it sit in there, of course, you're going to make more money overall in general. But if you leverage things, you can actually leverage up to a lot of money pretty quickly by doing it that way. So in order to avoid a fake out, like I just mentioned, the best way is like use this cup pattern and always buy above this prior uptrend. Now, that's the most stable after a dramatic pullback. Now, if you're just going to go do that after on every peak and everything, your odds of successfully making it over the hump is, not as high. So a lot of traders and a lot of trading programs will teach you all this stuff. I don't know. I taught myself, but I'm just saying, if you want to know the key things that most successful traders go off of, or the ones that do make a lot of money, are going to, well, strictly, a lot of them will just go off of the bull flag pattern, and you want to notice how the differences, it's ascending, it's going down, and it's rising above the bull on this phase. So if you're safe and just know this about is going to help you the most. But if you know this plus looking for flags after a dramatic pullback, your trading proficiency is going to go up dramatically. Now, I'm not suggesting you go trade all the time unless you know what you're doing. You will make more money staying in the stock longer, but a lot of times you don't want to stay in a stock forever like a game or AMC, because the pullbacks are going to drop so bad you're going to go broke, and nobody wants to be broke when you could be sitting on money and you could continue to keep making money. Although that's on momentum trading and things that aren't going to be your long-term profit makers. Although, the landscape is changing, so you want to make money all the places you can. I'm for value investing and growth, both. I mean, I like the biotech and EV stocks, but they're getting crushed. So I have amounts in them, but I have them in low positions, and I'm not touching them. I'll leave them there. I don't even look at it. But I have 4 different portfolios. So you have to really learn how to manage your risk. But if you at least know when to get into a trade, if you're going to do long term, or if you're forced to do trading, at least maybe this will help you out. So the real key, you have so many patterns and so many things you can look at for charts. You could be doing this all day and night and go crazy. But I'm going to give you the quickest, fastest way to do trading, save money from paying all these programs and stuff, is really a dramatic pullback, looking for the bull pattern and up over the top, and then that's the bull flag. A lot of people do that, strictly trading off the bull flag. Now, you can learn to progress and get into better trading methods later, but the key to this is being consistent and perfect and making sure that your ratio is good. So if you're closing, if you're profiting like 10 out of 10 times, or you're good at your practice, then you can start using margin on your stocks. Once you have a $25,000 account, you can do margin, which on TD Ameritrade is like 4 times that. So 25,000, you should be able to get, like, I don't know if your credit matters or anything, but you should be able to trade with 100,000 at a time. And 100,000 you could crank into higher amounts. Only on when the upside, when the pattern, is a good enough increase. If you're doing 100,000, you're going to need stretches of at least $1, because if you go anything less than $1 on 100,000, with that kind of leverage, you have so much potential to lose money so quickly. It's not really profitable. But these are your basic patterns. That's what you look for. That's how you know when to trade and what not to trade. So maybe that'll help you out. If you want to get into funding, get your credit repair done, or get personal funding or business funding, or get into business and get started and make some money, or want a corporation, give me a call at 312-473-4163. My name is Mark Anderson with Capital Cash. Thanks.